Hey, it's Cava Faulkner, Elk Grove and Sacramento's Living Trust and Estate Attorney. Thanks for tuning in for another edition of The Daily with Christine. I've had a number of professional colleagues and clients ask about Prop 19. What is it? What is the impact of Prop 19? So I'm going to do a series. Here's why you want to tune in and watch to the end of the video today, because what you're going to learn is just what is Prop 19. What are the definitions that make this a proposition apply to you or not? And also, when does it become effective? Tune in because I'm going to give an example which will maybe clarify for you how this could work as it relates to your specific situation. So first and foremost, Prop 19 is a constitutional amendment. It was voted into law during the general election on November 3rd, 2020. And Prop 19 adds new provisions for a base year value of a transfer of a primary residence, and we're going to talk about what that is, for persons at least aged 55 or severely disabled, or for victims of wildfires and natural disasters. In addition, this prop also changes provisions of the parent-child and grandparent-grandchild exclusions. We're going to talk about that on another video. So let's talk about the effective date of Prop 19. You'll definitely want to know that. The base year value transfer provisions become effective and operative on April 1st, 2021. The parent-child and grandparent-grandchild exclusion provisions become operative on February 16th, 2021. So, on or after April 1st, 2021, an owner of a primary residence who's over 55 years of age, severely disabled, or a victim of a wildfire or natural disaster may transfer the base year value of their primary residence to a replacement primary residence located anywhere in California that is purchased or newly constructed, that is both a principal place of residence within 2 years of the original primary residence, regardless of 2 years of sale, regardless of the value of the replacement residence. Now, if the replacement residence is of equal or lesser value than the original primary residence, the taxable value of that original primary residence will be transferred to the replacement residence. However, if the replacement residence is more than the value of the original primary residence that is going to be sold or has been sold, you still can get a partial reduction. The new base year of the replacement residence is the sum of the original base year and the difference between the full cash values of the original primary residence sale and the replacement residence. So here is an example of what that looks like so you can understand. So you have a homeowner who wants to sell their primary residence and they're over 55 years old. They sell the residence on June 28th, 2021 for $700,000. That's the sale price. At the time of the sale, this is a single family residence, but the tax base is $225,000. On July 22nd, 2021, a replacement primary residence is purchased for full cash value of $800,000. So you can see now that there is a difference between the sale price of $700,000 and the new purchase price of $800,000. So there's a $100,000 difference. In fact, a $100,000 increase. So because the new residence exceeds the value of the original primary residence, the difference is going to be calculated and transferred into your new tax base. So The difference is $100,000. As we talked about, your original tax base was $225,000. That gets transferred along with the difference in the sale and the purchase of your new home, those prices. So that is $100,000. So you're going to add the $225,000 plus the difference between the sale price and the purchase price of $100,000 for a new year value of the replacement primary residence of $325,000. So that will be your new tax base instead of the $800,000 purchase price. So you're basically saving $475,000 in tax assessment on your new home. Sounds like a great deal to me. So let's talk about some of the definitions. What do these things mean, and does Prop 19 apply to you? So a primary residence is defined as a residence eligible for either the homeowners or disabled veterans exemption. A victim of a wildfire or natural disaster is defined as an owner of a primary residence that has been substantially damaged as a result of a wildfire or a natural disaster that amounts to more than 50% of the improved value of the primary residence immediately before the wildfire or natural disaster. Damage includes a diminution of the value of the primary residence as a result of restricted access caused by the wildfire or natural disaster. So it could just be based upon not just damage, but also your ability to access the property. A natural disaster is a condition or peril as declared by the governor caused by conditions such as fire, flood, drought, storm, mudslide, earthquake, civil disorder, foreign invasion, or volcanic eruption. And a wildfire means an unplanned, unwanted wildland fire, including unauthorized human-caused fires, escaped wildland fires, use events, escaped prescribed fire projects, and all other wildland fires where the objective is to extinguish a fire. So under Prop 19, a person who's 55 years of age or severely disabled is able to transfer the base year value of a primary residence 3 times. However, the language is a bit ambiguous, and it is not clear as to whether 3 times would include a previously transferred base year value, or if it is 3 times, if the 3 times would be in addition to this. So what does all of this mean? First of all, in order for Prop 19 to apply to you, you have to be at least 55 years old. You have to be the victim of a natural disaster or wildfire, or a veteran who is disabled. So that is number 1. Now, this law becomes effective beginning April 1st, 2021. So what does that mean? That means that if you sell your home before that and you purchase a new home, these provisions do not apply to you. If this only applies to a sale of a home after April 1st, 2021. So you might want to consider that if you're thinking of selling your home and purchasing a new home. There could be considerable property tax valuation savings for you if you wait until this law becomes effective beginning April 1st, 2021. So again, there is a lot to this. Whether this will work to your advantage or not depends really on whether you fall within the definition of one of the qualified folks who are entitled to take advantage of this aspect of Prop 19. Tune in for our series to learn more about the full extent of Prop 19 and how it may apply to you, when it becomes effective, and how it works. Thanks so much for tuning in. Subscribe to our channel if you like what we're producing here and want to hear more about different topics that apply to, that work with respect to estate planning, any aspects having to do with property, real property. And let us know by liking our content, Let us know what else you'd like to hear, and we'd be happy to produce content on that as well. Take care. Thanks for tuning in, and see you next time. Bye-bye.